In this presentation, we'll discuss other items that would need to be included in gross income for income taxes. In other words, other items for income that would be received that we would have to record as income on the income taxes and therefore be likely to be paying income taxes on that income. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We need to record. Other items include things like jury duty. Items, if we get paid for the jury duty, then typically we do need to include that on the income statement or the income taxes. And usually we'll get a form that will tell us how much we received for jury duty, so we can add that. In this presentation, we will discuss other types of income that would have to be included in gross income for income taxes, and items that would have to be recorded for income on income taxes will typically need to be having tax paid on them. So other items that we would have to include in income that we may not first think of would be things like jury duty. So if we have jury duty, we would then, any income received for it, need to report that. We typically will get a form to report that, so we can do that easily, and it shouldn't be a significant, hopefully it won't be a significant portion or change our taxes significantly. What could change our taxes significantly are things like prizes and awards. So if we were to win some kind of large prize, such as if we won a new car or something like that, we want to make sure to drive it around and get the use out of it, because by the end of the year, we may have to sell the car in order to pay the income taxes on the car. So prizes and awards could be significant depending on the size of the prize that we happen to have. Forgiveness of debt, another one that a lot of people just wouldn't consider as something that we would have to include. But note that forgiveness of debt is just kind of another form of payment. If we owe someone, say we owe the bank so much money, and the bank just says, for no reason, for no compensation, they just say, we're just going to forgive your debt. Well, what they've really done is given you a payment in some way, because that's basically equivalent as getting money. So the IRS sees the forgiveness of debt as a form of income. So typically, if that happens, that could be a kind of shocker. So some that would only happen in unusual situations. But if there was a forgiveness of debt for no other compensation, then of course we got a benefit. We got kind of like a payment that the IRS would recognize as income. Insurance proceeds in excess of the adjusted basis of the property. So this is another situation that would be a bit unusual, but it could happen that we actually get proceeds from insurance greater than the property. So for example, if we had a business and the business burnt down or something like that, or we had personal property and something happened to the personal property and we got insurance related to it was actually more than the personal property, the value of the personal property, then we would have to record the excess insurance as income for taxes. For more accounting information and accounting courses, visit our website at accountinginstruction.info.